All right. Welcome back to another episode of the Real Estate Investing Club, and happy Friday, everybody. I hope you're having a great day. It is like 80 degrees, or supposed to be 80 degrees here in Seattle today, which is literally the best place on earth during the summer. So if you guys need to go somewhere, if you need looking for a place to do a vacation, Seattle is where it's at during the summer months. It's another good day, or it's a good day for a second reason, because we have Austin Zelan with us on the podcast. He has a ton of experience in a lot of different assets and a lot of different investment types. And so it'll be an interesting podcast to hear his perspective. Austin, thanks for hopping on the show.
Yeah, thank you so much for having me.
Yeah, I told you before we got on here, we always like starting with stories. I'm sure you got a good one. Why don't you take us to the beginning of your story and tell us how'd you get into real estate?
Sure. So I started out in corporate America, worked for a startup for a while, then I went to Microsoft and I was consulting them on like business strategy and some things like that. And during that whole time, I thought to myself, this is great. I thought this was my dream job. I like it. I have great benefits, great career path, all that stuff. But I didn't feel fulfilled. So I didn't really feel like I was doing what I was meant to do. And I felt like I could do so much more with my life. And so I started exploring different things that I could do on the side to maybe supplement my income or replace my income and use that money to then live my life however I wanted to. So even before Microsoft, I started trying out different things. And one of the first things that I tried was actually Forex trading. So that's trading different currencies from around the world. And so I got pretty good at it after a while. I'd say my first year I was terrible, just lost a bunch of money my first year. But going into year two, I finally became consistent. I wasn't like extremely profitable, like wasn't making crazy money, but at least I got consistent. And that gave me a glimmer of hope. I was like, okay, this might be my way out here. So I started getting deeper and deeper into that, started making some more serious money. And I found some developers, like software developers, who could code in the trading language. It's a little bit different than like JavaScript and all those other ones. But basically, I gave them my strategy and I said, hey, instead of me sitting here all night and trading, can you just take this and automate it for me? And they were like, yeah, sure, no problem. And I'm like, okay, let's see how this works out. So they created the software. It would duplicate my strategy and trade 24 hours a day. I didn't have to sit there anymore. And initially, I was really scared to use it, even though we went through all the testing and all that stuff. And so I didn't even put my own money into it, to be honest. I went out and I got a bunch of credit cards. I took the money off the credit cards and I'm like, hey, I'm still pretty young. I'm either going to go into a little bit of debt here, like 45,000 or so, or maybe I'll make it big. So I put all that money in the software, let it run for about a year, and we had over $200,000 in the account. And I'm like, wow, this is great. Let me see if I could duplicate this now. So then I started licensing out the software to people, and that company's still around. But from there, that was kind of my jump start into investing. So that allowed me then to pursue other things. And I started diversifying my portfolio with some real estate, with some other investments. And at the end of the day, I wasn't really like real estate wasn't really my priority, but I ended up there because of the safety of it, because of the reliability of it, and the different asset classes that you can invest in and create a balanced portfolio. Now, one thing that I learned about real estate, though, is I never want to be all in on any one specific category. Like I know people who specifically buy condos or they specifically buy beach houses or like cabins in the woods. And that's all great. But one
Cabins in the
strategy, yeah, and one strategy that's helped me is to diversify internally within that asset class to a bunch of different things so that if one isn't performing so well, like if nobody's staying in my condos in the city, they're all on the beach somewhere renting out my beach houses. So that kind of gives me a balance in the portfolio that never really swings me in one direction too hard.
Nice, man. So it sounds like you got your start in corporate, and then you got into investing, and then real estate was the second source of investment for you. And that's kind of the trajectory that a lot of people, most of the people that come on this podcast, their main focus is real estate. But I would say your strategy probably represents the general population of investors in real estate more so than the guests that we have on here, because a lot of people use real estate as a secondary investment, to other
Mhm.
investments like the stock market or whatever. So it's
Yeah.
always good to have perspectives like yours on the podcast because it is representative of the population. So you decided real estate, you really wanted diversification, you didn't want to focus one thing. How'd you get started? Like, what was the first deal that you bought?
Oh man, that was interesting. So it was my first time getting financed for a house. I'm like early 20s. I was buying a house in Florida,
Hmm.
pre-pandemic, or maybe like right the very, very beginning of the pandemic. So they hadn't really had
Why?
that.
Why Florida? You're from Seattle. You're from the Seattle area. Why'd you choose
Yeah,
Florida?
yeah. Well, I've heard some pretty bad horror stories in Seattle with like tenants and stuff like that, and even my own family members have experienced it. So, firstly, that. Secondly, it was very expensive here, and I didn't really want to spend $800,000 on a house when I could go to Florida and buy one for like half that price. So, basically, and another reason is I usually spend my summers in Florida, so I'm pretty familiar with the market. Then we were staying there around the beginning of the pandemic. And so we were looking around for different real estate options. And I just thought to myself, I'm like, hey, what if I just went door knocking and knocked on a bunch of doors and see if I could find some houses? But then I'm like, no, that's kind of weird. I've never really done that. I don't know what's going to happen. So let me just go with a real estate agent and see what's the cheapest house I could possibly find. And I literally had no strategy. I'm just like, hey, let me just go look at all the cheapest houses, like the 20 cheapest houses in this area that I like and see what I can find out. And oh my goodness, what a journey that was. We'd like pull up and some houses we just wouldn't even get out of the car because it'd just be scary. It's like, oh my goodness, where did I arrive? And so that really caused me to learn the area because the area that I invested in is St. Pete. I don't know if you know
Oh
that
yeah,
area.
yeah, yeah.
It's
I
really
mean, I've
patchy.
never been there, but I've heard it's a good market, and it's the appreciation there has been pretty good.
Oh yeah, it's been great. So we were driving through the city and it's very patchy. Like you could go through a super horrible neighborhood with like gangsters outside, and then a couple blocks over, it's like really nice houses. So it's very, very patchy the way they built it. It doesn't really flow like Seattle does.
Mm,
Seattle's like pretty, like you can tell if it's a good area in general or not.
yeah.
Whereas there, you don't really know. It's like every other street is different. So that was kind of an interesting experience. I got to see a lot of the city, and I realized that my strategy wasn't going to work because I didn't want to buy the cheapest house after all. So I
That
realized how
is, I feel
important.
like that's one of the lessons that almost 100% of the people that are just getting started in investing, that is the lesson they learned because we all start out and we're like, just give me the cheapest, whatever it is. I want to buy it for pennies on the dollar. I want $100,000 house. And then when you
Yeah,
do that, when you make that decision, even in the on the commercial side, like we buy self storage facilities, and I started out wanting the cheapest self storage facility, but you
yeah,
quickly realize that they're cheap for a reason, and cheap is not necessarily good. Doesn't mean it's going to be a good investment. So sorry, I jumped into your story. Keep going.
definitely. No, no, no. I totally agree with you. And I think that that is probably one of the most important lessons to learn in investing is, cheap doesn't mean good. And it's usually better to spend a little bit more, but have something that's quality and, potentially increase the value of that long term. That's where the big players are playing. But anyway, so went through kind of like this experience and I'm like, okay, well, what do I do now? So then I remembered again my strategy of door knocking. So I'm like, okay, well, maybe the house that I want just isn't listed yet. I was like, that could totally be the case. Let me just drive through St. Pete and find some neighborhoods that I do like and go knock on all the doors and see if they would just sell me my house. Surely I can find somebody who's maybe getting a little bit older. It is a bit of an older population there. Maybe somebody's getting older. Maybe they want to get rid of their house. Maybe they just haven't listed it yet, or maybe they would want to sell it to me or even owner finance. Like I literally had no idea how this whole thing works because I've never bought a house before. I just went and knocked on like probably, I don't know, 50, 60 doors. And I found actually a couple houses like surprisingly quick where there were some older people who just wanted to get rid of the house. And I saw an opportunity to remodel it. And I'm like, okay, great. So this is when I really like committed to the idea of buying a house. I'm like, okay, I'll do it. I know I'm going to get a good deal here, here, or here. And the funny thing is, I didn't even end up buying any of those houses, but it really sparked this whole journey because it showed me how realistic it was. So it gave me the belief that I could do it. Because again, I'm just making money clicking buttons on my phone at this point. So I'm like, great, this is super easy, but I have no idea what it means to buy a house. And so that gave me this whole idea. Then I started working with a real estate agent, and I realized that it was probably better to just go with the house that's already listed, they're represented. It's just a little bit cleaner. It's not as messy. Although I could have bought it from that person, I found that it was easier to buy something that was listed. So that's actually what I ended up doing. And so that deal, it was somebody who they like moved out of the house a while ago. It had been standing there for a while. And then I think that person passed away, so their kids were trying to get rid of it. So they were selling the house, and I ended up getting a pretty good deal on it, but I had to do quite a bit of work on it. And so the loan process, by the way, is a horrible process. It was probably the worst, one of the worst things I've ever done in my entire life. Because at this point, remember, I don't have a W-2 salary. I have like money that I'm investing, and they're just like, what is this app that has all this money in it? Like they don't understand what Forex trading is or a brokerage account. It's not the same as having like Charles Schwab or something like that. It's a different type of broker. So it was definitely a very weird experience where I had to like show all this income that like I'm making from this and from like tax returns and all that stuff. And I remember having a scenario where like they were giving me all this back and forth, and like I was showing them my bank statements. Like I could buy the house cash, but they were still being like, no, you need to show this, you need to show this, you need to show this. And I was like, literally one of the worst experiences of my life. They made me pay down a bunch of credit cards, like all these different things. So I don't know how people do this all the time, but it was not fun. And so yeah, anyway, so bought that house, ended up remodeling it. And at the same time, that whole market grew very, very aggressively. So the St. Pete market, like really, really like I don't even know what percent. I think it's like over 40% since then that it's grown. And it's been really, really positive because a lot of people were moving there during the pandemic. So
Mm.
they kind of moved into the bigger cities, I'd say, like Jacksonville, Miami, Tampa, and then you have these like secondary markets like St. Pete and Sarasota and Naples, where they kind of had a ripple effect from all the bigger cities. And they also ended up going up in value pretty aggressively. So as long as you were positioned well in one of these cities, the value of your house grew very significantly.
Nice. Nice. So you started door knocking. That is not a fun experience. I did it like very briefly when I just got started in I don't know 2015 or something like that. And
Mhm.
it can be if you're in the wrong area, it can definitely be a scary experience. But yeah,
Yeah.
I mean, you buying on market, a lot of people, especially big time investors, they kind of turn their head or thumb or nose or whatever that phrase is to buying on market because they feel like there's no deals there. But that is 100% not the case. A lot of good deals are on market. You just got to keep searching, keep digging until you find one.
Yeah, exactly.
So once you bought this was a short term rental, long term rental.
Long-term rental.
Yeah. So once you bought that first one, it sounds like before we hopped on the podcast, we were talking. You've gone into some Airbnbs, some LP, multifamily investing, and Airbnb arbitrage. So you've kind of expanded since then.
Yeah.
Once you finished that first deal, how did your career kind of evolve, and which one is the strategy that you prefer to use as an investment?
Well, actually, the funny thing is, I was planning to Airbnb that house. And
Mm,
then while I was remodeling it, they created some new city ordinance that didn't
mhm.
allow short-term rentals shorter than like 30 days. And I was like, really, guys? Like, this is literally why I bought the house.
Yeah,
So
cities are
I
getting
went,
angry about short term rentals.
yeah, and so I thought about it. I was like, well, how are they going to know, first of all? But then I was like, nah, whatever. I don't want to start, any trouble for myself in the city that I don't even live in. So I ended up switching it to a long-term rental, and that's what it is right now. And I think it's better that way. The house doesn't get so abused.
Yeah.
But also, yeah, so from there, I actually went into also a long-term rental situation. My second investment was in Pennsylvania. So I know totally random market, but I have a guy that I work with up there. And so he was able to source these houses for me, actually at a really, really good deal. So my second house, like the first one, keep in mind, it was like, I think 400, a little bit over 400,000. And so I had to put, 25% down or something. So that's what I'm used to investing. I'm like, okay, I probably am going to have to put this much down on the next house. And I thought that was normal. And then this guy comes along and he's all like, hey, if you give me 20K down, I can get the owner to finance the rest of it. And I'm like, what are you talking about? Like, how's this real? And so he found me this deal, which was, I guess, it was like 60,000. So I put 20% down, or not 20%, 20,000 down. And then the rest was owner financed. And I'm like, okay, well, I mean, it's only 20K. Like, worst case scenario, I lose 20K. Best case scenario, I'll have another rental house. Let's see what we can do here. So basically got this house with the 20K. And that was including like remodeling costs and all that stuff. And so we remodeled the house. Now it's worth probably around 100K total. But it's been renting out for 1,200 bucks a month, or
Wow.
like, yeah, 1190 or something like that. So
Is
around
this
$1,200 a month.
is this in Philly?
No, it's like an hour and a half north of Pittsburgh.
Okay.
Uh,
Okay.
yeah, and so I've been working with this guy, and like I mean, if you do the math, I'm literally making 6% almost a month on this house. And like to date, this is probably my most profitable ROI wise real estate investment. So
Yeah.
I'm like, okay, cool. Like it's only 1,200 bucks at the end of the day, but like that's a really great return for real
Yeah.
estate. So, anyways, long story short, continued investing with this guy, got some other houses, and a lot of the people in my program have done so as well because he's like, I don't know what he does to source these deals, but he's got like an unlimited amount, it seems like. So, everybody's buying these Pennsylvania houses, which I actually went out there to visit it because I was like, is this house even real? Like, does it exist? Because they were remodeling it for a while. I was like, I don't know, I need to go check it
What are you guys
out.
actually doing out there?
Yeah, I was like, I went out there to check it out. It was like in the middle of its remodel. But yeah, everything's totally legit. I mean, I saw the house, all that stuff. So that was pretty cool. And then from there, I started investing into other stuff. Now, if I were to say what my favorite type of investment is, probably the long-term rentals, to be honest. But I would say multifamily, because you just diversify your risk significantly. And the cool thing there is the whole valuation changes. You're no longer buying based on what you have in your bank account or your credit score or all that stuff. You're buying based on the operating income of the building. So now it's more like a business, which I can relate to a little bit more. And class A, class B, that's definitely the target. And the thing is that I know that I'm probably not going to cash flow a lot at the beginning, but that's why real estate isn't my primary goal. It's more of a secondary thing. I know I can create generational wealth with it, but I know that I'm probably not going to cash flow super heavy off of it. That's why I have other investments.
Yep. Makes sense.
Yeah.
So it sounds like you said multifamily. So, but the actual investment strategy that you're using there is you're investing in a syndication as a limited partner, right? So you don't like active investing. You like just being an LP, analyzing deals, vetting sponsors, and finding a good deal to place your capital in.
No, not necessarily. I want to GP a deal myself,
Hmm.
but I just haven't had the right opportunity to do so. So I definitely will in the future, but so far my involvement has only been on the LP side.
Got it. Yep. And that's a good place to start because then you get to learn how the process goes. You understand what a syndication is. You understand, what an OM is, all those documents that you got to sign.
Yeah.
And you understand what good communication is because that is the key to syndications is communicating with your LPs. And if they don't hear from you, they expect the worst. They're going to say this deal is going to the shitter, even if you're making, money hand over fist. So if you have a good experience, I hope you are having a good experience with your general partners, and they're communicating well with you, then that will give you a good model for how to, start your own GP, be your own sponsor on a deal.
Yeah, definitely.
Right on, man. Well, I'm going to take that opportunity and move us on to the quick question round. Are you ready?
Sure.
All right. It starts with books or any form of education. Could be movies, books, Netflix shows, podcasts, whatever. I just need two recommendations, one for general life wisdom and then one for business or real estate.
Um, I would say general life and business. I really like Atomic Habits. It's one of
Oh,
my
yeah.
favorite books. I recommend that one actually quite often. I think it's such a powerful thing when we realize like our habits and what they can actually do for us because that's not like the first step. You don't start with the habit. Like you don't wake up and you're not like, oh, hey, I want to have a good habit today. It first starts in your thoughts. You're thinking about it, then your thoughts become actions, and your actions become habits. And so it's like it's so far down that trajectory of things that you had to have changed your mindset. You had to have taken action on it and had that initiative to then have some sort of habit to even form. And then once you form that habit can really change your life down the line. So I would say in general in business, that has been a huge one for me. As far as real estate, actually, I don't think I've ever read a real estate book, to be honest.
Yeah,
So
fair enough.
yeah.
Have you done any education in real estate? Have you done, I mean, maybe watched a couple YouTube videos, gone on Bigger Pockets, anything like that?
Yeah, actually I know the guys from Bigger Pockets. I've been to a bunch of real estate events, Grant Cardone, some other ones as well.
There you go. So we're gonna
Yeah.
say 10x for you. That's the recommendation.
10x.
All right. Next question is for your younger self. Let's go back to the Austin who had no experience in investing. He was just working corporate out in Redmond. Go to him, look him in the eye, give him one piece of advice moving forward.
I would say to take bigger risks because one thing that I learned in business is that everybody goes down the same path. It's
Mm,
like let's say we have a 100-meter track. Everybody goes down the same 100-meter track, except somebody's shooting for $100,000, somebody's shooting for $1 million, somebody's shooting for $100 million, but it's really the same distance. It's just what gear are you in, or like what plane are you racing on? And I find that the people that think bigger tend to achieve bigger.
nice. Yeah, that is good advice and something that I wish I had started with is going bigger. I've said this on podcasts a few times. When I got into commercial, I thought starting small would limit the risk, but it actually increases the risk because small properties have small NOI, which means if you have one mistake, it wipes out all your profits. So bigger properties, there's less risk because there's more income. It's kind of counterintuitive, but if you're starting out, definitely start big for the reason that you're going to make more money, obviously, but also it's less risk.
Yeah.
All right. Next question is about the US. There's tons of opportunity out there. It's a really big country. Give me the single metro you're most excited about investing in today.
Mm, Probably Nashville or Franklin.
Nashville. All right. I like it. I actually just went to Nashville the first time, like 2 years ago, and I had a blast. I didn't realize it was such a fun city. The food there was fantastic.
Hmm.
All right, next question is about finding deals. It all starts with getting in contact with the seller and penning up that purchase agreement. So, what is your favorite way to generate leads and find new deals?
Do you mean for multifamily or for like any type of deals?
Any deal. Yep.
For now, it's actually been through either wholesalers or people who are in the market. I just don't really have time anymore to go door knocking like I used to. But that was actually a pretty cool experience. I'd say if I door knocked, I'd probably get some way better deals than I am getting right now. But I'd rather have somebody else do it and I'll pay them for it.
Yeah, makes sense. All right, that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. It's a two-parter. Where can they find you, and then what can they expect when they reach out?
Sure, yeah. So the best place is going to be Instagram. My handle is at Austin Zelan, AUSTINZELAN. And I mean, they can expect to learn about different passive income investments, including real estate.
Sweet. I will put that link in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description, and in there you can find Austin's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Cool. Thank you for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a review on Apple or whatever you're listening to this on. Other than that, I hope you guys have a fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.